first I want to start with the fact that you're shorting bonds, not the stock, because normally people are going to short the stock. It's lower down in the capital structure. Bonds seem to be money good.
So our focus at Cohanzick is primarily credit. So bonds come natural to us. And the reason we're shorting the bonds is people think Pepsi, they think nothing's going to go wrong, everything's fine, those bonds will pay off at maturity. But they're not getting very much premium for the fact that shareholder activists are at their heels. They just reached an agreement with...
They just put Nelson Peltz on their board.
It's like letting the fox into the hen house. I mean, he's not going to stand by and do nothing. And the fact that they just announced a $12 billion share buyback, think about that. That's not good for bondholders. They're going to take cash that could be used to service debt and delever. Instead, they're leveraging up. They're going to work their way down the investment grade spectrum. So they're going to teeter toward junk just to buy back stock to help shareholders.
So you think Pepsi will be junk, or do you predict at some point in the future it will be downgraded to junk?
I'm not a forecaster. I'm not a fortune teller, and probably not anytime near soon. But I do think they are strongly incentivized to borrow money at these low interest rates to buy back their stock. I mean, let's say Pepsi really knocked the ball out of the window, according to analysts today. They had much better volume growth, for instance, than Coke yesterday. But at some point, they're reaching maturation, and they've got a company that should obviously be split up. And let's say the company trades at 20, 25 times future earnings. That's 4 or 5% earnings yield on stocks. When you can borrow at 3, 3.5, you should be buying back your stock with bonds that you're borrowing and financial engineering and leverage up. And that's what they're going to do with.
This is about financial engineering. This isn't about whether people are drinking Gatorade or eating Lay's potato chips. This is just about corporate structure.
So it is about financial engineering, but it's also about the fact that their organic growth is going to run out.
But isn't that okay? It's a massive company. Why does it have to just keep growing and growing and growing? People eat Doritos. They drink soda. They drink Gatorade.
It's fine. And if you're a shareholder and you want to deal with a value stock with limited growth, your stock will trade like a bond, right? You'll get paid a premium. And I believe management, you have a segment coming on in the future about how CEOs are going to line their pockets with stock options by boosting their stock price for the short term. Well, the quickest way to do that is to increase your dividends and buy back your stocks and split your company. And you have a guy who's in your board of director seat saying you should merge with another company we have interest in, or you should buy back stock. This is the era of the activist again, and it's because of low interest rates, and that's not good for bondholders.
Do you have an opinion? I know you're a credit guy, but do you have an opinion on the stock? If you think the company is going to get stretched, if you think the core business is going to fade, is that trouble for the stock?
Look, anytime a company's priced at a high P multiple and they can't fall in with earnings growth, it's a problem for a stock. We were long the stock against our short bonds for a while, and as the stock started to react positively to all the activist movement, we sold it. And obviously, we sold too soon because the stock keeps moving up. That being said, at the end of the day, I'm concerned about this company's organic growth, but here's something people aren't even thinking about. So, zero-calorie soda, except your metabolism thinks you're taking in sugar. Did the soda companies know? Is this a tobacco lawsuit waiting to happen? Maybe, maybe not, but it could be on the horizon. I'm happy to be...
How real is that, though? I mean, are people really going to be suing Pepsi because their Pepsi One was more fattening than they thought?
I think lots of class action lawsuit lawyers are looking for big litigation, and if there's a way that they can make that argument, they will. I think the bigger issue is, can they prove damages?
You think that's a legitimate thorn in Pepsi's side?
You tell me what the documents are going to show up in discovery, and I'll tell you if it's a legitimate thorn. Did they know? Yeah. Did they know that the science they were creating was tricking your body into still consuming calories, even though it's at 0 calorie? I don't know what they knew or not know, but I do think it's something, as a bondholder, I have to worry about.
How big of an issue is the strong dollar? Because that doesn't seem to be Pepsi specific. It's basically any company that works in international markets is dealing with this.
So if you look at the strong dollar in, let's say, the high yield market, in periods where we've had a strong dollar that's gone with economic growth, high yield bonds have actually done quite well. So I think the point of this is you have to look at what does the strong dollar mean relative to economy and future earnings growth, and also it doesn't affect all companies equal. I'm pretty sure people eating at Checkers Drive-In or Shake Shack that just went public is not going to be nearly as affected by the strong dollar as an international company like Emerson Electric, which we're also short by.
All right, so what's the answer? To spin off the snack division?
The answer is if I'm short the bonds, they should be as proactive as possible for shareholders' benefit.
Would you like to see them? I mean, from a corporate perspective, take away the fact that you're short the bonds. The smart thing for Pepsi to do is the smart thing to spin off their snack division.
I think the smart thing for them to do is to listen to their shareholders and make a decision whether we want to be long-term focused or short-term focused. And short-term focus, spinning off the businesses, is definitely smart. And quite frankly, when you're as big as Pepsi, they'll probably be a lot more efficient spun off.
Don't you think putting Nelson Peltz on the board is listening to their shareholders?
I think it's listening to Nelson Peltz.
What does that mean?
He's a large shareholder. I'm not sure his interests necessarily aligned with, let's say, a pension plan or an insurance company that's a long-term holder. He's into direct results today.
So wait, you think they just...
And he also has a large interest in Mondelez.
Then do you think they just put Nelson Peltz on the board to quiet him?
Yeah, of course.
Question for people watching at home and someone maybe thinking about shorting Pepsi's bonds. Is there a risk just in the fact that we're still in this huge bull market for bonds? Is this the kind of thing that one would pair with, shorting U.S. or going long U.S. Treasury or something like that?
Look, it's absolutely very frustrating in our strategy at Nexus to be short bonds and have Treasury rates keep going down and investment grade spreads continue to compress because we're going against a lot of headwind. But if you're a typical investor, you have a fixed income portfolio anyway. You're not 100% equities. You have some bonds. So it's sort of a natural hedge.
What's your time horizon on this trade? When do you think it'll work out?
Well, we started in the fourth quarter of 2013. So we have a pretty long-term perspective here.
And what have the bonds done in the last year?
We're about even to where we were, finally, but we lost a lot of money in the interim.
That's a barbed wire thong trade if I've ever heard one.